We begin with markets, as we always do, and stocks are fractionally higher as we await the market open. Joining me now with more is Dale Smothers. He's the founder and CEO of RDS Wealth. Dale, it's good to have you joining us this morning from Kentucky. Thank you very much. What do you make of the market at these levels?
Good morning, Kristen. Yeah, these levels, they show a little bit of a pause. And let me just recap kind of what we've went through. The average investor is looking at their 401k statements, they're looking at their brokerage statements, and they're seeing their statements significantly higher coming out of July. July did not disappoint us. Over almost 2.5% on the S&P 500. Many mega cap names led us higher with their earnings that were substantially surprising to the upside. This is a great thing for the average investor, and many of the average investors may see their numbers higher, but not really understand why. Earnings was a big driver. Another big driver, Kristen, was the fact that trade really started to seem as if it was going to clear up. The trade tensions around the world seemed as if things were about to kind of get placed where they needed to be. Well, over the last 4 or 5 days, just like you said, we have had a pause. And this pause, from our perspective, seems to be a healthy pause, although it does have reasons. And the reasons are a little bit more tension in the trade environment, a little bit more uncertainty about the labor market. We had one of the worst negative revisions in the labor report in over half a century. This is a significant thing that caused pause to those who are maybe a little bit more informed investors. They're concerned about what potential companies may do in reacting to these types of pieces of data that come out. And couple that with the fact that we have earnings that are still showing better than expected Q2, but with trade war uncertainties kind of creeping back in, what does that mean for Q3? This has caused a lot of investors to maybe push the pause button for just a second on the buys that they would have possibly been doing otherwise, Kristen.
Yeah, and in this market, given that scenario, Dale, that you just laid out, how are you advising your clients, those that you speak with too, when it comes to positioning for August and September?
Yeah, we're keeping a close eye on the rest of earnings. We've got a big name in NVIDIA, clearly, that does drive the market. Tech is going to lead the market higher. For the clients that we work with here at RDS Wealth, predominantly we are looking at generating solid income, predictable returns, stable value type of investments. We have a little bit of that speculative money, of course, that we believe AI is going to be the place to put that type of money. But right now, if you're looking for strong, stable dividend companies, there are those that are still out there that are not appreciating at the S&P 500 returns, but they're still paying strong dividends. And these quarterly reports that we're seeing come out show that those dividends are fairly secure, if you will. They're not likely to go anywhere. We see companies that are raising dividends. If you're not familiar with picking individual names, maybe if you're an individual investor out there trying to find the right one, look at ETFs perhaps, like NOBL, that is a dividend aristocrat type of stock that you can buy, has a lot of different names in it that have appreciating dividends. What we're looking at, Kristen, right now is for those types of stable returns, places that maybe will weather this pause until the S&P 500 takes a leg up a little bit higher, which I believe happens closer to the end of this month as we start to see, again, NVIDIA, one that we are keeping a close eye on, that could spar that little bit of momentum back into the market that we're looking for.
Dale, certainly among the NYSE listed community, we see 3 stocks, shares, I should say, performing well here in the wake of what was better than expected results for NYSE listed Disney, Uber, and McDonald's this morning. When it comes to these corporate results and how these companies are weathering tariffs and, of course, what does appear to be a slowing economy based on the jobs revisions, what is important to hear from these executives as we await NVIDIA's report and the rest of earnings season to unfold?
What we're listening for, Kristen, is forward guidance. And the uncertainty for Q3 may cause a lot of these names to kind of go on sale if we look at their stock price. The uncertainty around what is to come with tariffs, what is to come with a Fed rate cut. These are certainly going to be things that we're listening to as earnings season wraps up. a lot of the forward guidance that we heard from CEOs in prior earnings calls has been fairly optimistic. So I'm concerned with what we're going to hear over the next, say, month of earnings calls with the new data that we see from the labor market. Does that mean that a lot of employers perhaps will start laying off, knowing that the economy is starting to slow? AI itself is certainly causing the market to go higher, but is AI going to potentially be an alternative for places for them to look to fill jobs that maybe human beings aren't filling? And again, cutting costs with that. Artificial intelligence is one that is certainly leading us higher. And to take it to that, Kristen, I'll tell you, we're paying very close attention to the AI race and what it has to offer.
We are watching that AI race very closely indeed. Dale, we got to leave it there, but thank you so much for joining us this morning. That's Dale Smothers, founder and CEO of RDS Wealth.
Thank you, Kristen.
Thanks again.